Hello everybody and welcome to the midweek market update from Smack the Markets for the 13th of May. So as the weeks progressed, we've had rather sort of subdued volatility in most of the currency markets and also equity markets in the first half of the week. Things are starting to liven up a little bit now as we started to see a little bit more sort of realization over the impact of the coronavirus measures and the impact on the economy that is likely to prevail over the sort of forthcoming months and years. We're also seeing underlying tensions increase between the US and China, and of course that's not particularly helping on investor sentiment either. So let's take a look at a few markets here that we're keeping a close eye on and some of the opportunities that we're looking at coming into the second half of the week. Now, if we come and take a look at a couple of markets that we discussed on Monday, first of all, the Dow, first off, if we take a look at this on the come back to Monday, we were looking for the market we're back to this sort of point here where the market was in between this trading window of 24,300 and 24,680. We're looking at the potentially the market sort of moving up to close this window, but at the same time I've been looking for weakness, evidence of weakness around this 24,300 for some time, and I mentioned this a few times over the past couple of weeks. This sort of puts in place a kind of sort of structure here of a bit of a heads and shoulders pattern, but we really need to see the market sort of break these lows around the sort of 23,000 level. If these lows are taken out, then we can see that it's taken out these two structure points that the markets have been supported with for the past few weeks, and that really sort of gets the market completely out of this sort of sideways range and really opens up the taps for 22, 21 and those much lower levels to be tested. Now you can see the price action this week very sort of subdued until late last night, in fact just before the close, when the admittance from sort of Fed speakers that of the impact on the US economy of the measures that have been put in place with the COVID-19 pandemic. So a number of things going on here. Maybe we get a sort of continuation of weakness here, and I'm certainly keeping an eye on these levels. Now, if we take a look at the S&Ps, S&Ps are looking a little bit more sort of clearer. If we take a look at this on the daily and just sort of zoom out, I've got a level in here around 28 sort of 25. You can see that there's quite a significant sort of level through here. If I could zoom in right out now, if I come in on the chart, we can see that the market's just bounced off this level just recently this morning. We've got a high, we've now got a lower high in the market. If the market takes out this level, which is a long-term support and resistance structure, then it could open the taps up for more weakness to come, and certainly changing the structure of the trend here on the daily time frame and lower. So we're keeping a close eye on these US equity markets. We do believe that these will roll over, and we will see more weaker prices in the not too distant future. The question is when and where to get sort of positioned. So keep an eye on these the Dow, the S&Ps around these levels. Now, if we come and take a look at the other markets that we discussed on Monday, which was, if we have a look at Great British Pound against the Swissy, again, if we come to the 4-hour time frame, we can see the sort of levels here that we were looking at on the higher time frames. The market's taken those levels out now, and now we're sort of pulling back. So pull back into the sort of same price point around the sort of 120 area or thereabouts, just underneath here, actually around 119.50. Brings us back into this sort of lower support and resistance structure, and also back into the moving average zone as well. So again, potentially looking at more short opportunities here on pound Swissy, and there's a if the market gets up to this sort of decision point, we'll certainly be looking for weakness coming in there. Now, as far as sort of trading windows to the short side, we've got sort of potential sort of move down here to around sort of 118. Doesn't look to be an awful lot in the way for a move down to 118. Below that, there is much sort of deeper potential free space to the short side after that. Now, the other markets that we discussed on Monday was euro dollar. If we come and take a look at euro dollar, not a great deal has happened with euro dollar. Unfortunately, the market did test the 108 level. It's not managed to really sort of make any advancements underneath there. We've seen this has really been the US dollar that's been playing this market. This is on the opposite side to it, of course. And the market's now back up to 108 sort of 50. So general trend structure not looking sort of wonderful here, and we're still away from that sort of level. So no opportunities that we've been seeing here on euro dollar at the moment. Coming back to the new currency markets, one that we are keeping an eye on is the Kiwi against the dollar. Again, from the higher time frame perspective here, you can see on the weekly chart that the market from the coronavirus crash has retraced right the way back up into the sort of 50% retracement zone of this crash. It's also back into the moving averages, and now we're starting to see some bearish action coming back in this week. So come down to the lower time frames, you can see here on the daily time frame that we've got this 60 level here, which is quite a significant sort of price point on this market. Again, we've seen like the S&Ps, we've sort of now got a lower high here within the context of this daily trend. Underneath this level really does sort of open up the markets for a potential move to the short side as well. So again, if we come down to the 4-hour time frame here, you can see the 60 level here. You can see that it's well tested and precisely tested on the 4-hour time frame. Underneath that, we've got well, another sort of trading window down there to just above that sort of 59 level, and then again down to around the sort of 58 sort of 400 zone as well. So plenty of distance to the short side if we get these sort of opportunities. Now, the sort of thing that I'd be looking for here is possibly some sort of break and pullback, and we tend to look for use our techniques to get in around the rejection of the pullback. So there's a few markets there that we're keeping a close eye on going into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.